Looking like the Republicans take the House and Democrats hang on to the Senate. All this pessimism going around, do you share it?
I don't. I look at the way managers are positioned, okay? We've got the highest cash levels since the pandemic lows, since March of 2009, since the tech wreck. Usually when things get to this level of extremes, it's a market turning point, and we just don't know what that catalyst is going to be. What we have seen is central banks around the world blinking. So the ECB, they came out with that facility to buy Italian bonds on the periphery. You saw Bank of England have to buy gilts. And the question is, when is the Fed going to be next? And the key thing here we have to keep in mind, Chair Powell has this idea that he wants to be Paul Volcker. The difference between Paul Volcker and today is when Paul Volcker was raising rates, the debt to GDP was at 30%. Today we're at 122%. So for every 1% he increases the Fed funds rate, that adds $285 billion to the deficit. So it becomes unsustainable. And sooner or later, like all politicians, they get disciplined by the credit markets. And when municipalities and companies have to refinance and the government has to refinance and the interest costs become unsustainable, they'll have to back off. We've just come off of 3 emergency hikes of 75 basis points. Since 1983, you've had about 88 hikes. 75 of them were below 50 basis points. So what we've done is pretty material, and we have to kind of just take a pause and see how that works.